Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. So here we are. We're looking at the S&P 500 ETX, SPY, and you can see essentially for basically from the end of the year till now, we've pretty much gone nowhere. It's been a bit of a wild ride, but if you look right here where we're at, right here, you can see we're basically at the exact same place we were about a month ago. So wild ride, but essentially nothing has happened. And volatility is going down, so nothing spectacular to look at here. This is the S&P 500. If we look at the NASDAQ, you can see fairly similar story. Again, same thing. Here we are today. Here we are back in December. It's been about a month, been all over the place, and essentially we've gone nowhere. The only one that looks a little bit different is the IWM, and that's because we're similar story. It's been bouncing around and we're where we were a month ago, but we're a lot lower than we were back then. So we're nowhere near our highs on the Russell or the IWM, but you can see that's been going down, but essentially same story. We are at the same place we were a month ago. So what are we going to trade this week? Well, we're going to do something that I do at the beginning of every year, and I've kind of given it its own acronym. I call it BOGES. So let me just put it out for you. It's basically bonds, oil, gold, euro, and SPY. And what is this? Well, these are supposed to be non-correlated assets, meaning if you make trades in each one of these different things, we have no idea if they're going to move together, move apart, they can do anything. But essentially, they're supposed to move independently of each other. The reason I bring this up is because when you start making trades, many people don't know that if you make trades in the same sector, a lot of times they'll move together. So what do I mean by that? Well, let's say you make a trade in Facebook and Google and Amazon and Apple. You might say, okay, look, these are 4 different stocks. Obviously, anything can happen, but these are all in the technology sector, or the QQQ, the NASDAQ. And what happens in certain times of, let's say, crisis, things tend to move together. So even though these are independent stocks and they have their own earnings and they have their own kind of information about them, generally speaking, sectors tend to move together. So if we have 4 different trades, we might think, hey, we've got pretty good diversification. I've traded 4 different things, but in reality, these 4 are very much the same, because in the tech sector, when things go well, all these tend to move together, and if the tech sector is going down, these tend to move down together as well. So we're not diversified. Unlike over here, where these are supposed to be, not always, things change obviously all the time, but these are 5 independent kind of sectors. So if you're trading in these 5 things, you have a much better chance that these move independently. So maybe there's a winner in one of these while the other one's a loser, and then it flips around, the other one becomes a winner and a loser, and we can kind of manage these. The point being, I'd like to try and trade in these different sectors at the beginning of the year. I like to try and put trades on in these 5 different sectors if possible. And then as the year goes on, obviously we start moving around the market and trading different things. So last week we made our trade in SPY, so we can basically cross this one off. So this week, with these left, what am I going to trade? So euro is not a very liquid stock, let's say, so it's pretty much hard to trade euro. So even though I have it in here because it is a diversified asset, it's much more of a buy-sell euro stock. It's hard to actually trade euro with options, which leaves us kind of these 3, bonds, oil, and gold. So let's take a look at those. So if we go to bonds, these are the bonds. You can see these have been in basically a straight down shot for the last 6 months. Volatility is decent, so this is definitely a candidate. Volatility is at 32, looks pretty decent. It's near kind of a low, so that's a potential trade. If I go over to the oil, which I usually use XLE as the oil ETF, there's a few of them, but XLE is the ETF for energy as a whole, and oil is a big part of that. You can see this has been shooting to the moon. Volatility is also decent. It's at 30. So With the bonds, I'd be a contrarian and probably shoot to the upside as far as my trade. I'd make the trade think it's going to go up. With oil, I might think it's going to go down because it's been on a rocket ride. But let's go to the last one. Let's check out gold and see where that's at. If we go to gold, this seems to be more of like a range, right? This seems to be kind of staying here. And look, volatility is way up at 48. So as far as volatility rank, it's got the highest one. We always like to trade high volatility. It seems to be more in the range than the other two. So we will get to the other ones probably in the next couple weeks. But for now, we're going to go over and trade gold specifically because we feel like it's in a range and volatility is the highest one. So if I go to the trade page, I'm going to go right here to 40 days because we like to be as close to 45 as possible. Tomorrow that'll be 39, but the market doesn't open until Tuesday, so this will be 38, let's say, come Tuesday when the market opens. I've already set us up to make it easy. The stock price is $249. So what I've done is I've gone $9 down on the put side, $9 up on the call side. I've created a $2 wide iron condor by buying the put and the call $2 away, and I'm looking to collect at least 66 cents or more on this trade. So come Tuesday when the market opens, if nothing changes, we're going to go $9 up and down on the call and put side, create a $2 wide iron condor, and look to collect at least 66 cents or more. So that is gold, and that is BOGES, as I like to call it, which is how I usually start the years. I like to start the years putting on trades in those sectors as much as possible, and then from there move on to independent stocks. I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being what is an option. You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.